obviously we've got quite a lot of risk appetite that has come to the fore. We're seeing equities doing quite well. We're also seeing the yen and the dollar losing quite a lot of ground. Apart from yesterday, we did see both of those currencies increasing quite significantly. What would you say the biggest challenge or the biggest issue is for risk appetite right now?
Well, obviously the elements of the economic recovery have got to fit into place. We're coming from a situation where 6 or 9 months ago, financial markets were either facing Armageddon or thought they faced Armageddon. Then all of a sudden, it hasn't been as bad as some people fear. The worst case scenario have not materialized, and by and large, the massive amount of monetary and fiscal stimulus that most governments around the world have put in place seem to have worked. We are seeing a rebound in confidence indicators. We are starting to see a rebound in industrial activity signs, which are a sign that after cutting stocks, jobs, investment massively, companies are realizing that, hey, this is not the end of the world, so we don't need to cut stocks as much, and we don't need to cut jobs as much, so it will create an automatic rebound. And that is basically the anticipation of that rebound that has led markets to outperform, that lets risk to be repriced more normally from levels that were probably very much way out of range earlier this year. The problem is now that risk is more or less probably fairly priced. You know, it doesn't seem way out of line with traditional measures. So if the recovery does not show signs of sustainability, then there is a risk. That is the bigger challenge.
We also had Iran test firing short and long-range missiles, and of course a lot of talk about uranium enrichments. Are you concerned about geopolitical tensions emerging?
Well, they've been sort of like off the radar screen, you know, for the past year, because we focus so much on issues like the sustainability of the world financial system, the global leveraging, the role of hedge funds and other financial players. We've all forgotten that, hey, this is not a world that is generally at peace, and there are still some geopolitical issues that need to be resolved. Now, in the past, you know, the Iranian issues have occasionally created a little bit of upset, and then the gamble has not paid off, so the Iranians generally sort of pull back. But at the end of the day, they are going to try and see how far they can go as far when it comes to nuclear enrichment.
I'm sure it will actually increase the oil price as well.
And that is generally, if there is a consequence, if there is a problem in the Middle East, that it pushes up the oil price, can shift the money to the dollar as safe haven assets, weaken risk appetite generally.
Well, the dollar has been trying to find some form of direction, but it seems that it's pushing more towards the weaker levels that we've been seeing over the last couple of weeks. Where do you see the dollar going from these levels? Do you see the dollar as fundamentally weak?
We think it will remain quite weak in the near medium term, essentially because it has become more or less a funding currency of choice. Before, the funding currency for carry trades or for investments into longer term assets or in riskier assets was the yen, because the yen was the country with very low real interest rates. Now, pretty much all the Western world has very low interest rates, and nobody really expects the Fed to hike for the next 9 months or so, 6 or 9 months. So then it's on a 3 to 6 month horizon, it's very a safe bet that if you borrow in dollars, you're not going to have to pay much on the money market. Now, in the medium to long term, of course, I mean, the dollar looks weak versus currencies, for instance, like the euro, which is not the currency of a fundamentally strong economy at present. Actually, the Eurozone growth is weaker than the US. But historically, unless you get a sudden increase in purchasers' willingness to hold US securities, US stocks or bonds, the dollar tends to be weak because of the funding element of the fact that the US has current account deficits. So even though the dollar does look weak, it will probably remain weak over the next year or so.
Well, we're seeing quite a lot of willingness to buy into South African assets, the rand gaining quite significantly, and of course we've seen that being translated in the equity markets. And obviously there's a lot of interest in South Africa right now, and obviously high yielding currencies. Your view on the rand, how long do you think it's going to stay at these levels for? And do you think it's just a function of a weaker dollar? We've also got other things that have come into play, the MTN Bharti deal, and of course a narrowing current account deficit.
No, it is a function of all these elements, but I would say it is a function mainly of the weaker dollar, of the increase in appetite for risky assets and for commodities, and of some FDI operations, which coupled with purchases of foreign equities, of South African equities by foreigners, is making the current account deficit, which by itself is slower, easily financed so far this year. The problem is, I don't think the current account is sustainable at those levels. Once domestic demand recovers, we'll probably go back to current account deficit of 5 to 6% of GDP, and there will come a time when you won't have a Bharti MTN, you won't have a Vodafone deal, and foreigners might think, well, I mean, I'm exposed enough to South Africa, I'm long enough, I don't need to increase my holdings of South African equities, and then you can have a correction. Now, will it be in 6 months, 1 year, or 2 years' time? That is what is very difficult to tell. I don't think it happens right away, especially if the dollar remains weak over the next year or so. But I think over time, the competitiveness of our economy is such, or is not, that we will need a weaker dollar, a weaker rand at some point. The market will push it down.
We have quite a bit of data that's going to be released tomorrow. Trade balance, we've got money supply, and also consumer confidence. Just your view on the trade balance, because it is generally a very volatile number. Do you think that's going to impact the rand?
Well, if it remains as good as we've had in the past few months, it will be a favorable background for the rand near term, because, as I say, the current account deficit has narrowed thanks to an improved trade balance. My feeling is it's very much a story of imports being even weaker than exports, and if over time that will correct, but maybe not as soon as the August number. I think we have a very small deficit in August.